Representative Schroer, I'm going to do my bill first really quick. So I'm sorry I didn't tell you that. We're going to do the Senate Bill 736 first, just to get an idea. Well, Barb, would you call the roll? We need to establish a quorum.
Yes, Senators Crawford.
Here.
Trent. Here. Brown. Hoskins. Huff. Mosley. Roberts. Here.
We do have a quorum. We're going to start with 736. I'm just trying to get an idea on timing. On the next bill, well, first of all, on 736, how many are here to testify for or against? Okay. And then on the second bill, if I can get my glasses on so I can read the number, 903, how many to testify on 903? Okay, I think we're good. All right, we're going to start with my bill first, and I'm going to turn it over to the vice chair.
Please proceed when ready.
Thank you, Mr. Chair. For the record, Sandy Crawford, District 28, here to present Senate Bill 736. Senate Bill 736 increases the amount the state treasurer can invest in linked deposits, known as the MOBUCS program, from an $800 million cap to $1.2 billion. Linked deposits, as you know, are the funds that the state treasurer deposits in banks around the state at a specific rate, and the lenders at those banks are able to lend that money out at a reduced rate. As you can imagine, in times of higher interest rate, there's great demand on these funds. In fact, I think the state treasurer will tell you that he ran out of funds last spring, and I'm going to let him dive into the details. But the other thing the bill does, besides raise the cap, is it changes the limits on the buckets of money from a dollar figure to a percentage of the total. So we don't have to keep changing along with the cap, so we don't have to keep changing those numbers. We can just do it as a percentage, and I think that'll be much easier. With that, I'll answer any questions you have, but I think we have an expert behind me that can answer more details.
Questions for the bill sponsor from the committee? Seeing none. Appreciate that presentation. Witnesses to testify in support, Senate Bill 736. Please proceed, Mr. Treasurer.
Vivek Malik, Treasurer. As presented, I am appearing in support of the bill, and we saw that last year in May we had to shut down the program as we reached our cap in May way too soon, and this year I toured about 45 counties across the state advertising this program. We do not have a marketing budget in our office for MOBUCS, but I was the marketing guy for MOBUCS. And that plus the huge demand due to high interest rates, we had some money that came back. We reopened the MOBUCS program, the portal, on January 2nd, and within 6 hours, all $120 million were called for. So the demand is huge, and we definitely, these tough times, would like to help all small businesses and farmers that we can, and that's why this increase is very imperative for our office to make sure this program is successful and does what it needs to do.
Thank you for that presentation, that testimony. Any questions for this witness? Yes, Senator, please proceed.
If the bill passed, how soon will the funding be available?
If the Senate or the House will be kind enough to put an emergency clause, we would be having these funds sooner than later. Otherwise, it will be August.
Okay.
And I would also like to mention that right now there are about 1,000 loans, and a total of about $538 million are invested in Missouri. Missouri's money is invested in Missouri, which is the critical part. With the exception of just 2 Senate districts, 13 and 22, there are MOBUCS loans in each Senate district, and totaling about more than 33% of the total. Just in this committee alone, there are more than 30% of the loan in MOBUCS. highest being in Senator Crawford's district, about 51 million. And then Senator Huff's district, about 50 million.
You said none in District 13,
No law
which is
and-
mine.
Yes.
Oh, that's interesting. Okay.
I'll come down to your district to advertise it.
Okay. You said we have high interest rates right now. How can we lower these interest rates? Do you have any input on that?
Well, on the Fed interest rate, I do not, but we definitely help to the MOBUX loans. That drops down the interest rate by about 30%. So if on a regular loan you are looking at a 9% interest rate, that can get down to about 6.25% or so,
Okay.
which is a huge relief for small businesses.
And how can people find out about the MOBUX?
The information is on our website, Treasurer's website, under investments, MOBUX, and we also release press advisory whenever the portal is going to open. And last fall, I toured across the state talking about the program as well, so that was wide coverage in the media as well.
Okay.
I will continue doing so.
Okay. So I can set up a town hall and you can come.
Absolutely.
Yeah, okay. Sounds good.
And if you can invite some chamber people and banks, that would be great.
All right.
Further questions for the treasurer from the committee? Seeing none, thank you again for being here today.
Thank you.
Further witnesses to testify in support for Senate Bill 736. Please come forward, make sure you fill out your witness cards, and proceed when ready.
Mr. Chairman, members of the committee, David Kent, registered lobbyist for the Missouri Bankers Association, here in strong support of the increase on the cap of the MOBUX program. I want to thank the senator for sponsoring the legislation. We appreciate her efforts. I don't have much to add other than we are the MBA and our banks are huge supporters of this program. It's great for small businesses, for our ag producers, et cetera. With that, I'll take any questions.
Thank you for that testimony. Questions for this witness from the committee? Seeing none, thank you again for being here. Further witnesses testify in support. Please proceed.
Thank you, Mr. Chairman and members of the committee. Heath Clarkston here on behalf of FCS Financial, the Farm Credit System. We think this is a great program and it deserves to be expanded. It's got a major use in rural communities and obviously all over the state, but our membership in rural communities value this and appreciate the sponsor and the treasurer for all their efforts. And we really like to see this get done because the need's there and timing is really key right now with a lot of opportunities on the economic development side of things.
Thank you for that testimony. Any questions for this witness from the committee?
Thank you.
Seeing none, thank you again. Further witnesses testify in support. Please proceed when ready.
Mr. Chair, members of the committee, Heidi Geisbuehler-Sutherland here on behalf of the Missouri Chamber of Commerce and Industry. Just want to echo what the previous witnesses have already said. It's a great economic driver for the state, and it's a really good opportunity for small businesses to grow and improve.
Thank you for that testimony. Questions for this witness? Seeing none, thank you again. Further witnesses testify in support.
Mr. Chairman, Andy Arnold here on behalf of the Missouri Independent Bankers Association, supporting the bill.
Thank you for that testimony. Questions for this witness? Seeing none. Further witnesses testify in support. Please proceed.
Mr. Chairman, members of the committee, Devin Althoff, Missouri Farm Bureau. Missouri Farm Bureau represents over 150,000 members across the state, most of which are farm families. We want to testify in support of this bill. This bill is very important for farmers and ranchers in the state of Missouri, and we appreciate the senator bringing this bill forward. So thank you very much. We support this bill.
Thank you for being here today. Any questions for this witness from the committee? Seeing none. Further witnesses testify in support.
Mr. Chairman, members of the committee, my name is David Overfelt, and today I'm representing Associated Industries.
If you could, please use the microphone for the folks at home. We can hear you, but the folks at home might not be able to. You almost got away with it.
Mr. Chairman, members of the committee, my name is David Overfelt. Today I'm representing Associated Industries of Missouri. David Overfelt, one more time, the green light. It's a great program. I'm glad to hear the comments from our treasurer, and it'd be great to see this expand more into the urban areas.
Thank you for that testimony. Any questions for this witness? Seeing none. Appreciate you being here and using the microphone. Further witnesses testify in support of Senate Bill 736. Seeing none. Any witnesses here testify in opposition to Senate Bill 736? Seeing none. Are there any here to testify for informational purposes only? Seeing none. Bill sponsor, would you like to have a closing word?
Just thank you for the opportunity to be here today. Thank you.
Absolutely. Thank you for the presentation of the bill.
All right, Senator Schroer, we will now hear Senate Bill 903, and you can proceed when you're ready.
Thank you, Madam Chair, members of the committee. Today I present Senate Bill 903. It is 903, correct? Okay. We've got another committee going on right now, so I'm trying to keep up to date on what bill we're on up there. So I may skedaddle and go back up to education thereafter if this takes a long time. Essentially, what this bill is aimed at is closing a loophole from a bill that was passed back in 2017. It's House Bill 339 and 714, providing what shall constitute a reasonable opportunity to settle. In 2017, we passed the previously mentioned bills on Section 537058 on time-limited settlement demands and how it may be used in bad faith claims. Statute provides claim time-limited demands to be held open for 90 days, that medical releases are timely provided to insurers, and demands provide sufficient information for proper claim investigation. Ultimately, what this language is trying to do, we're not seeking to take away any liability from wrongdoers or the insurance companies. Ultimately, we're trying to seek to establish clear, articulate rules that everyone must abide by if an insurance company fails to abide by our laws in properly responding to pre-suit demands, timed or untimed. Trying to avoid unnecessary damages with this language or cost drivers that are increasing costs onto the insured, the Missourians. And I do want to thank all the sides. Since I pre-filed this legislation, I've been talking with both of the sides on this. It's a very complicated issue that I know if you're not an attorney, you're probably tuning it out. The vice chair, when we were in the House, we'd see that a lot. If you weren't an attorney, you just kind of go back to your office. So we're trying to compile an actual settlement, so to speak, and try to get this to the floor to fix these issues and anything around this issue. So with that, I'll take any questions.
Questions for the bill sponsor? Seeing none? Anyone here? I think we're going to go back and forth. Oh, Senator Mosley, I'm sorry. Did you have a question?
Yes. I think I'm reading this correctly. Are you saying that they need to file something within 90 days? Is that what you're saying?
Well, no, just to clarify to the language, and there will be a sub, and I know there's going to be even more language once we get to the floor, but this language here on Senate Bill 903 would say that it has to be open for 90 days. If it's not, it has to allow or state how long it's going to be open if it's after 90 days.
Is that for the victim to file a case, or is that after they file?
Well, that's the demand. So if I send you a demand for, let's say, policy limits, it's to make sure that that's going to be open for at least 90 days, that we're going to have a drop dead date, so to speak. And if it's left open, we're trying to clarify with this language and moving forward, if it's 120 days, if it's 300 days, just so all the parties know when the settlement or when the offer expires. But I'm happy to work with you to clarify that even more.
Okay. I'll listen to the witnesses to see it.
Further questions for the bill sponsor? Seeing none, we are going to go back and forth. We're going to start with for, then against, and we'll do info at the end. Just one real quickly, so I can see what kind of balance we have. How many are for and against? Okay. And then info. Anyone? Okay. All right. We'll start with for. And it looks like you have your witness form, but just a reminder to everybody in the audience to be sure and fill out your witness form and leave it on the desk, please.
Madam Chair, members of the committee, Michael Henderson for the Missouri Insurance Coalition in support of Senate Bill 903. I want to thank Senator Schroer for bringing this bill forward, which, as stated, simply seeks to close a loophole and abuse of a policy decision this body made back in 2017. So what that policy decision was is, to the extent a plaintiff is going to send a time-limited demand, a settlement demand, and say, hey, I'm going to leave this open for X amount of days. If they later want to use that as evidence that the insurance company had a reasonable opportunity to settle the claim by a product of receiving that time-limited settlement demand, and they want to use that as an example as reasonable opportunity to settle in a later bad faith litigation claim, which carries with it extra contractual damages, which go beyond policy limits. So if you have a policy that maybe has $100,000 worth of policy limits, we're talking about possibly being exposed to millions of dollars in excess of those policy limits. If you want to do that, you can do so. But there's certain rules we need to follow here, right? You need to hold that settlement demand open for 90 days. So Senator Mosley, if I were to send you a settlement demand and say, I'm hereby demanding that you settle this claim for X amount of dollars, and I want to point to that settlement demand as you having a reasonable opportunity to settle the claim, in order for it to be reasonable, I need to give you 90 days to respond to that settlement demand. So that's where that 90 days comes from. Right, so that 90 days allows an insurance company an ample amount of time to properly investigate, which in many cases are very catastrophic injuries. There's some other rules that the time-limited demand needs to follow. It needs to provide medical releases, so insurance companies can request proper medical records, look through those. It needs to identify the injuries at play, where the injury occurred. This is just all basic information that needs to be supplied to the insurance company. If that time-limited demand is later going to serve as proof that the insurance company had a reasonable opportunity to settle in a later bad faith claim. So that's what this body decided in 2017. Here's the rules of the game. Here's what everybody's going to abide by. What we are seeing now is the abandonment of time-limited demands in the use of untimed demands. So now, instead of sending a time-limited demand and saying you have 90 days to respond, I'm just going to send you an untimed demand. Here's an offer to settle for either policy limits or the amount set forth in the settlement agreement. I'm not going to tell you how long you have to respond to this claim. I could pull it back in 10 days. I could pull it back in 30 days. I could pull it back in 60 days. But that's kind of up to us to know, and you don't get to know that information. Those untimed demands are then pulled back and then being used as an example in later bad faith litigation. Plaintiffs' attorneys are pointing to those untimed demands and an insurance company's failure to respond to that demand as a basis for bad faith litigation. So all we're saying is, whether it's a time demand or an untimed demand, let's keep it open for 90 days. Let's make sure we get the proper medical releases to properly investigate these claims so we can determine whether someone's entitled to benefits. What we're not doing, we're not taking away an ability to send a time demand less than 90 days or an untimed demand at all. All we're saying is, if you want to use that time demand or that untimed demand as a basis to show that the insurer had a reasonable opportunity to settle, here's the rules by which we all have to abide by. We are not taking away anybody's ability to pursue an insurance company for bad faith in the event the insurer acted in bad faith. What we're simply saying is, again, that time demand, that untimed demand, cannot serve as a basis for that bad faith unless it plays by the rules that this body already set forth in 2017. So that's what we're seeking to do, just close a loophole on the use of untimed demands to skirt the rules this body's already decided. With that, I'm happy to answer any questions.
Questions for this witness? Senator Mosley.
So currently, how long do you all have to respond?
Yeah, so Senator Mosley, under this statute, when a time-limited demand is sent to an insurance company, so if you send me a demand, time-limited demand to settle a case, this statute says that settlement demand needs to be held open for at least 90 days. So it gives us 90 days to receive that settlement demand, do a proper investigation to determine liability and exposure on that claim, and then to respond.
So currently, you don't have 90 days, is what you're saying?
Currently, if you were to send a time-limited demand and say, hey, you have 20 days to respond to that time-limited demand, that's your prerogative as a plaintiff, and we would then have 20 days to respond to that time-limited demand. But by product of that time-limited demand only being held open for 20 days, our response or lack thereof to that time-limited demand can't serve as a per se basis of bad faith evidence in a later bad faith claim. So if you wanted to send a time-limited demand and point to that as us having a reasonable opportunity to settle that claim in a later bad faith action, you would need to hold open that settlement demand for 90 days under present law. And all we're asking is if a settlement demand is sent without a time limit, that it also has to be held open for 90 days to provide us a reasonable opportunity to investigate the claim and respond to the settlement.
Senator, do you have other questions? Any other questions for the witness? Seeing none, thank you for your testimony. All right, we're going to go to against. So anyone here wishing to testify against, come forward, please. Just a reminder to fill out the witness form if you have not yet and leave it on the desk. And you can proceed when you're ready.
Good afternoon. My name is Amy Gunn. I am the current president of the Missouri Association of Trial Attorneys, and I appreciate the opportunity to be heard this afternoon. This bill, the purpose is to make it harder for people like yourselves and your constituents who have paid for insurance premiums to seek relief from the insurance company to whom you've paid your premiums when that insurance company unreasonably fails to pay a claim within for an excess judgment. Now, I just listened to my colleague explain Senate Bill 903, and I see it a different way. Bad faith is a cause of action. That's what we call it when you sue your own insurance company for not settling a claim, or you can assign that right to the person that's been injured. It's essentially a bad faith claim. So there are certain elements under the law that you have to meet before you can pursue and have a valid bad faith claim, and they are that you've paid for a policy of insurance, that the insurer has an exclusive right to settle your case. So ABC Insurance Company has the exclusive right to settle your case. Even if you've caused the accident, you can't say that I think you should settle. It's the insurance company's exclusive right. The insured, the person who's paid the premiums, can't voluntarily settle the case. There's a claim against the insured. There's a refusal of the insurance company to settle the claim within the policy limits, and that fraud or bad faith by the insurer occurred when not settling the case. So, for example, Joe rear-ends Susan. Susan sustains a fracture, needs surgery, is out of work, has damages from that rear-end accident. Joe has $25,000 in coverage like majority of Missourians. ABC Insurance Company doesn't pay that $25,000. Susan calls ABC Insurance Company and says, what are your limits? Right now, ABC Insurance Company doesn't even have to tell her what the limits are. But she says, well, I want the limit. I want to be paid for the accident that your insured caused. ABC Insurance Company, for whatever reason, they don't have to say, denies the claim. We've been seeing much in the news now about how AI has been denying insurance claims in healthcare industry. The most recent statistic is that 300,000 claims by Cigna for health insurance claims were denied by AI in 1.2 seconds or fewer. So that's what's going on in the insurance industry. Nevertheless, ABC Insurance Company, for whatever reason, denies the claim, and Susan is without recovery. Susan then gets a lawyer. Pursue the claim. There is a verdict against Joe for $100,000, and $25,000 was all he had. It could have been settled within the $25,000. ABC Insurance Company wouldn't settle it. So now Susan has a judgment against Joe for $100,000. Joe's personal assets are now at risk for $100,000. Joe, understandably, is upset by that and can't understand why his insurance company, to whom he paid premiums, didn't take care of him. Joe then is at the mercy of 903 and 537.058, which, it's true, was a brand new statute in 2017 crafted by the insurance company, who now is coming back to tweak it, I guess. But it's important to note that this language now says, because I heard him say, well, if it's reasonable, it's going to be fine, you just can't use that demand. This is what this bill says. In any action, this is Section 2, in any action alleging extra contractual damages, that's bad faith, anything outside the policy limits. In any action alleging extra contractual damages against the tortfeasor's liability insurance company, that's ABC, any prior settlement demand, this is the new language, any prior settlement demand to settle any claim for personal injury, bodily injury, or wrongful death shall not be considered to have been a reasonable opportunity to settle the claim unless the settlement demand was, in writing, referenced this section by certified mail, etc., etc. Shall not be considered reasonable opportunity. That's the crux of a bad faith claim. Was it reasonable for ABC Company to deny the claim? This statute codifies that if you don't follow this to the T, it's not reasonable. Not that you just can't use it in evidence later, but that it's not a reasonable bad faith claim. So Joe is at the mercy of Susan, knowing what this statute requires, following it to the T before Joe can have a valid bad faith claim. I don't know if that's the intent. That's the way it reads. So I oppose this bill. I oppose the underlying intent of the bill. I think it puts premium, or folks such as yourself who've paid premiums, at risk to have no recourse against the insurance company to whom they've paid policies, to whom they paid premiums, to be held accountable for their bad faith. And I'd be happy to take any questions.
Questions for this witness? Seeing none, thank you for your testimony.
Thank you very much.
We're going to go back to in favor of.
Madam Chairman, members of the committee, if I may proceed. My name is Clay Crawford. My name is Clay Crawford. I'm an attorney in Kansas City representing insurers and occasionally policyholders in insurance coverage and bad faith cases, past president of the Missouri Organization of Defense Lawyers, and I'm here today on behalf of Shelter Insurance Companies located just up the road in Columbia. Plaintiff's lawyers' job, their only responsibility is to get as much money as they possibly can for their clients and to maximize their profits. All too often, unfortunately, in the state of Missouri, the way they go about doing so is by setting up insurance companies to have to pay, in some instances, tens or hundreds of times the amount of the insurance policy they underwrote and charged a premium for. In 2017, this body passed a basic fairness statute, Section 537058, that said if you're going to try to set up an insurance company so that you can go after them for way more than they contracted to pay on behalf of a policyholder for your client's injury, you got to give them at least 90 days. And you got to give them the information necessary so they can evaluate that claim. That's already been done. The Missouri legislature has already determined that 90 days is a fair and reasonable period of time. What's happened, unfortunately, with Section 537058 is the same thing we saw with the 2017 amendments to Section 537065. Plaintiff's Bar has developed loopholes in the statute, and the Missouri courts have been reluctant, if not completely unwilling, to recognize the public policy in 537058, which is to give insurers a basic, fair opportunity to settle these claims. You say, well, why? What do they need this time for? In a personal injury case, including the one described by Ms. Gunn, the plaintiff or the claimant holds all the cards. Because of some very good laws like HIPAA and privacy laws, insurance companies can no longer go out and obtain information. Someone just tells them, I'm hurt in a wreck. And unless they get medical authorization, employment authorization, education authorization, they have no ability to gather information on the claimant, particularly with regard to the amount of the claim and what is a fair amount for them to pay in settlement. That's what the original 058 bill did. Just to respond to Ms. Gunn's example, what happens in the real world is that after Susan's injured and she retains a lawyer, that lawyer can send a demand for policy limits to the insurance company with no deadline. It doesn't tell the insurance company how long it will remain open. They can tell them only what they might want the insurance company to know, but give them no authorizations and no ability to investigate that claim, in particular their client's injuries. And then within 15 or 30 or 45 days, they can withdraw the offer with no notice to the insurance company and essentially pull the rug out from underneath the insurance company without giving them a fair opportunity to investigate the claim and accept the settlement if the amount demanded is reasonable. Why would they do that? The reason why is because apparently in Susan's case, she sustained $100,000 in injury. Joe only chose to purchase a $25,000 policy. The plaintiff's lawyer and perhaps their client, they don't want $25,000. They want the full amount of the injury, notwithstanding the limited amount of coverage. And the only way to do that is to set up the insurance company and make it appear as though they have refused to settle in bad faith. So that's where the need for the statute comes in. That need has already been recognized. The statute was passed. Now we have these loopholes. And so what the purpose of SB903 is to simply help close the loopholes by requiring that if you're going to use one of these demands to try to set up a bad faith case that can be assigned to the plaintiff later, as Ms. Gunn mentioned, by the insured, then you've got to give just a basic fair amount of time for that insurance company to investigate the claim and determine if they should settle it. This bill, the original 058, and this bill would in no way limit a claimant or plaintiff's attorney or plaintiff's ability to make a demand on whatever terms they think is fair. They can make a demand for 10 days. They can make a demand with no time limit. They can do any of that. They just can't use that to try to set up a bad faith claim and make an insurance company pay more than it underwrote the policy for. It's good for policyholders in the state of Missouri for us to close these loopholes, for you to close these loopholes, because without it, the cost of these bad faith claims that can be in the tens of millions of dollars on a $25,000 policy where the premium charged may have only been $60 or $70. That all gets passed on to other insurers in the state of Missouri, or hurts insurance companies' ability or even their willingness to write insurance in this state, which reduces competition and increases premiums. This kind of fair common sense closing of a loophole to effectuate a statute that the Senate has already passed and the House has passed and the governor signed is necessary for basic fairness in the insurance claims industry. And the last thing I would say is this statute is also going to be fair-minded and equitable claimants and plaintiffs. It's going to be their best friend, because if they comply with the statute as intended in 2017 and as it would now read if the legislature closes these loopholes, and an insurance company still doesn't settle their case, insurance company chooses to place its financial interests ahead of the insured and not settle after having been given this fair opportunity as determined by you, this statute is Exhibit 1 in the bad faith case. There's not going to be many defenses left open. If they comply with the statute, the insurance company doesn't settle, and it turns out that Susan did in fact have a $100,000 injury that the company would not pay $25,000 to settle, then that company is going to be at high risk for having to pay the full amount on a bad faith claim. So let's not conflate the property and casualty industry with the health insurance industry. We're not talking about first-party claims where someone has paid for a health policy and it's being unfairly denied by AI. That's not what this is. We're talking about third-party bodily injury liability cases where people are making claims and filing lawsuits against insureds and giving insurance companies a fair and reasonable opportunity to settle those claims.
Questions for this witness? Senator Brown.
So I've heard the time period addressed, but what are your thoughts on what the previous witness stated about the additional hoops that this creates? Let's see, any prior settlement demand shall not be considered to be a reasonable opportunity to settle a claim unless, I guess it's in writing, efforts to specifically reference that section, sent by certified mail with return receipt requested. Do you feel the need for those additional hoops also? Are there examples of people that did not receive a settlement claim? What's behind that?
100%, Senator, and I'll give you two examples from my own practice, and I'm just one little lawyer in the corner of the state. I've had two cases that resulted in bad faith claims, one in excess of $15 million, one in excess of $50 million. In the first instance, a settlement demand, this was pre-537058, was sent with no time limit from a fax machine at a physical therapist's office with no way for the carrier to respond to the demand from the claimant, and was sent to a if not decommissioned, essentially abandoned fax number that the claimant claimed to have found on the internet. I spent hours searching for it and couldn't find it anywhere. That's where she said she got it. Don't know what happened, but that's an example of the need for certified mail. Second claim, same thing, Missouri injury, bad drunk driver case, horrible case, multiple fatalities. But the plaintiff's attorneys faxed the demand to a claims office in Northridge, California. Unsurprisingly, it did not make it to the appropriate claims people before the demand, which was untimed, was withdrawn. So that addresses the certified mailing piece. The reference to the statute, I think, is just to make clear these are the rules that apply.
Thank you.
Further questions for this witness? Seeing none, thank you for your testimony.
Thank you for your time.
Anyone else here wishing to testify in opposition? Seeing none, okay, we'll just, from here on out, we'll go in favor of until we get down to info if there is any. Next up, in favor.
Good afternoon. Rich Aubuchon. I represent the American Property Casualty Insurance Association and the Missouri Civil Justice Reform Coalition. Here to testify in favor of the legislation. We've already addressed this issue as a policy matter dealing with time-limited demands. I think this is a fix, which you've heard from other witnesses in relation to those which are not timed. The policy discussion, I think, is closed. Frankly, the issue is about creating level playing field for all demands, that if they would be used for bad faith litigation, that they at least be put on notice and give enough time. So my sense is that this is a fix. It isn't a huge groundbreaking issue.
Questions for this witness? Seeing none, thank you for your testimony. Next up in favor.
Good afternoon. Matt Barton, Chief Executive Officer of the Missouri Association of Insurance Agents, testify in support of the legislation. Not a lot more that I can say about it other than this is a common call that I get from my member insurance agents that insurance companies are saying more and more that Missouri is becoming a very unfriendly state in which to do business. And we're seeing insurance companies also exit the state, especially in some very specific niches. So we hope to improve the litigation landscape in the state of Missouri.
Questions for this witness? Seeing none, thank you for your testimony. Next up in favor. Be sure to sit in front of the microphone and turn it on. Gotcha. Got it?
It's pretty darn green. I miss the past. I've lived through the past. Madam Chairman, members of the committee, my name is David Overfelt, and we want to go on record for Senate Bill 903 for Associated Industries of Missouri, Missouri Retailers Association, Missouri Grocers Association.
Questions for this witness? Seeing none, thank you for your very loud testimony. Next up in favor.
Madam Chair, members of the committee, Heidi Geisbuehler Sutherland here on behalf of the Missouri Chamber of Commerce and Industry. Also wanted to go on record in support.
Questions for this witness? Seeing none, thank you for your testimony. Next up in favor.
Madam Chair, members of the committee, Brian Burnskater here on behalf of the Missouri Organization of Defense Lawyers, go on record in support.
Questions for this witness? Seeing none, thank you for your testimony. Next up in favor. Seeing none, anyone here for informational purposes only? Seeing none. Senator Schroer, do you have any final comments? Okay. This will conclude the hearing on Senate Bill 903, and I would entertain a motion to adjourn. Let me make a motion to adjourn. We have a second. All in favor say aye. Aye. Opposed? Nope. The ayes have it. We're adjourned.